I'm Doug MacKenzie.
And I'm John Ward.
And we're the co-hosts of the ABCs of IBC podcast.
Come join us as we share our unique perspective on the infinite banking concept as the creator, Nelson Nash, intended.
Welcome back, everybody.
Hey. Hi, everyone. Hi, Doug.
Hi, John. How are you?
Yeah. I need to breathe. I'm a little excited.
Yes.
Yeah. I was having, I don't think I shared this already, but if I did, there we go. But I was sharing something with one of my clients, and he said, "Oh, well, some people might not like you because you're doing something they're not doing." And they're like, "Hey," and I said, "Sometimes I feel like I that's what ends up happening to me. I get a little frustrated that it's going what you and I do, and how I feel is that you go against the grain, and it's." I am patient, but it's also like, oh, all these other people that are running around talking about money, they seem to get listened to because it's more common, right? And
it's within the parameters of what people are used to hearing about.
Yeah, exactly. Yeah.
Like if I were to go, I can tell you right now, if I were to go tell a bunch of my friends that like I've got this super hot new stock tip in this micro cap that no one's heard about, but I'm pretty sure it's going to go up 5 times. I'd be much more likely to get them to buy that than I would getting them to put money into a life insurance policy, which is, and I don't push life insurance on anybody that I know. It's just not the way that I do things. But I have friends that I've known a very long time that trust me. I trust them. I trust their opinion on things. They trust my opinion on things. But they'll ask me questions about what I do, and I kind of fill them in, and it's this immediate block on their end. Like, no, that's, cool, but that's not for me. Or that, no, I'm going to stick with my normal, the thing that everyone else is doing because it's foreign. It's different.
Yep.
And John, we were talking for a while before this, as we always do.
Oh, we gave a secret. Yeah, for sure. We were. It's the longest I think we've ever talked prior to recording.
We pretty much did an entire episode before.
Pretty much.
But I was like saying that because I thought about this before. Like if I were to present to someone the attributes of like a qualified retirement plan, and then the attributes of a whole life insurance policy that's well designed, but we didn't call either one of them what they are. So people just had to look face value. What are these things? What do they give you? What's guaranteed? What's not guaranteed? How do they operate? I think the vast majority of people would pick the life insurance policy. But
it's not quite the Coke versus Pepsi blindfold, right? But it's along the same ideas. If you just said, hey, and I don't know, whatever you call it. I know we say this is an investment, but if you said investment 1, investment 2, and here's all the attributes, and this is how this works. Yeah, I think they would. But if you told, once you do share that it's life insurance, I certainly know through talking with my clients that I shared with you, right, that it is like they have 3 heads, when they're saying, yeah, my life insurance guy, my guy, and he's, they're looking at him like, life insurance? Like, you think I should take some of my money off the risk table of being invested in the market? And, hey, because you're of certain, these people he talks to, some of them are in their 70s, some 60s, whatever, and they have made some money in their lives through work and maybe in the market. But now he feels as a friend like, gosh, you shouldn't be so exposed, right? And so this isn't just for, people on the verge of retirement or in retirement, or this is about, protecting yourself, but also being prudent financially. Like, again, you can risk, because that maybe it's fun, and I get it, because it would be nice to find that, penny stock or whatever, right? Put a bunch
Yeah.
of money in it, and then it's definitely going to be a, 5, 10 multiple in the next year or whatever. I mean, that would feel good because then you'd do things that you wouldn't do for a while, maybe, right? Because you'd have all of a sudden, you'd have a big chunk of cash. And, if you wanted to take a month off and take your family to wherever, and just travel the world, wow, it would be a no brainer. I just made so much money. I just made $1 million. So, right? This slow and sort of boring, but it's not really, to us, it's not really boring. I'm kind of saying the words that you'd hear from people, right? Just, but the fact is, if I had done this, it would have been so fun right now, because there's a lot of money that's flowed through my hands. And if I had stuck it into a policy first, and it was always there, right? It was always growing. I mean, I might have loans outstanding, but my cash value was always growing all these years with, I'll just say it, it's been millions of dollars.
Hmm.
I'll say it, I don't have millions of dollars. But I would if I had done this.
Yeah. Yep. Yeah. It's well, a little depressing to look back at that sometimes, but
Yeah.
it's a good learning experience, at least to pass on to others.
And that's what I'm trying to do.
Exactly. And I think that the one thing, so it was John's idea for this episode, and I'll let him kind of delve into like why he wanted to hop into this. But
Yep.
the
Yep.
reality is that most of our listeners are probably um, on the higher income earning brackets, therefore, kind of uncommon earners. That's just the nature of most people that get interested in things like this tend to make a little bit more money. And by the way, if you're listening and that's not the case, that does not mean that this doesn't work for you. But what we wanted to point out was that it makes sense if you're an uncommon earner to look at things from an uncommon perspective. And what we've seen is that most people don't tend to actually evaluate things objectively. They just go off of biases that have been passed down. And so we wanted to kind of address that so that people had a real chance of solidifying their financial future and making the right choices. So I know you kind of pulled that idea from Bryan's book, John. So I'll
Yep.
let you hop away with that.
Yeah. So one of the books that Brian Bloom wrote, the Confessions of a CPA series, was the truth about life insurance. And towards the end, he said, there's three levels of knowledge, right? The first is, we know what we know. Whatever amount that is, for it's different for all of us. And then there's the things we know that at least we've heard they exist, but we don't really know anything about them. And I know one of the examples he used was nuclear physics, for example. Like, I couldn't talk about nuclear physics. I'm a little embarrassed to say I don't know anything really about it. I don't. And though I know, I've heard the term
Me neither.
and I've read it and I've read the term, but I don't know. So so I know that it exists, so to speak. So people tell me. And then there's things that you don't even know you don't know. Because when people say, geez, I learned something today. You didn't even know you didn't know that, right?
Hmm.
You just, your lens, your perception, your angle, you just didn't see it. It's a, as he refers to, a blind spot. And part of it is, right, you just have never been exposed to it. You just, and so literally what you and I do for a living, when people come across infinite banking and the infinite banking concept, and you talk to them on the phone or you meet them in person, they'll say, this is wild. Like, I didn't even know this existed. And this isn't somebody who was born, 10 years ago. This isn't some, fourth grader. These are people that have been educated out in the world, making things happen in their own lives and their families' lives. And it's like, yeah, there's so few people that have even heard about the infinite banking concept.
Very, very few. To this day, I do not know anybody in my personal life that does this. Nobody.
Yeah. And maybe the only way that they've even heard of it is because you've mentioned it.
I'm the only one that it, yep. So the only reason that any of my friends, any of my family members know about it is because of me.
So yeah, that kind of you know, makes me think about sitting in an auditorium, every year, February, they have like the annual conference for the Nelson Nash Institute. They call it a think tank, to bring all the practitioners together that can make it. And it's like you're sitting in a bit of a movie theater. And not every seat is full, but let's just say there's 200 people there. And there might be more. Well, there's certainly more, but I don't really know the exact count. We've kind of talked about this before, but let's just say there's 300. 300 practitioners across the millions, the hundreds of millions of people just in this country. And we're talking about this goes into Canada too. So there's
Yeah.
practitioners in Canada. So add whatever their population is. I don't know. Let's just say it's getting close to probably a 500 million people. And there's like 300 practitioners. So even,
And I just Googled, by the way, that estimates range anywhere from 250 to 370,000 traditional financial advisors.
I know. I know.
So
It's like you're
we're
going to get
talking a difference
buried
of
by
a
then.
factor of 1,000.
Yeah, I was just going to do some quick calculations and just and say what percentage, like, hey, if you got 300 people out there helping people get into these policies, I'd tell you they're not doing 100 policies a year. You know, let's say they're doing 100 just for easiness sake, right? And so you'd say that's 30,000 families, and 30,000 times 20 years, right? Which is only 600,000 families. So what percentage is that of a 500 million? It's less than 1%, I can tell you that.
Yes.
So
And
you're not going to hear about most things that are only, there's only, well, there could be more people that know about it because they've heard of it, but probably not a lot more. So if something in our society is only a percentage or less of common knowledge, what is the chances you're going to hear about it?
well, and it's not advertised. So that's the other main thing is so, I see advertisements all the time for financial services. It's just like a very common thing. And people are told about their 401k options when they get a position most of the time. That's really commonplace now in the US. If you get a job and it's W-2, really good chance that you're going to get access to a 401k. So people are just aware of these things.
Right.
But what we're trying to explain is that, just because you're not aware of it doesn't make it a bad idea. That's kind of a fallacy of logic that a lot of people have. And I was very guilty of in the beginning. And we've talked about this. I really struggled internally with this for like months actually before I pulled the trigger and got my first policy, because I thought, okay, on paper, like I said in the beginning of the episode, on paper, I couldn't find any issues with it. In fact, it was incredible. But I kept thinking that, there's no way that this can be what it is. Otherwise, I would know more people doing it. But it's not really like a sound logical conclusion to draw. The interesting thing is when you look at the people that have been implementing this steadily over, the last century or more, well, it used to be a lot more normal people, like in the early and mid 1900s. That was a very common place for people to save their money. But wealthy people have consistently used whole life insurance policies as a vehicle to store and then leverage their money. And I've heard that argument from people before. Well, that it works for wealthy people, but like, not for me. Why not? Wealthy people, for the most part, have gotten wealthy doing two things: owning real estate and owning businesses.
Yep.
That's
Yep.
indisputable. The
Yep.
infinite banking concept works really well with business owners and with people that like to leverage their policies to buy more real estate. So, if you are already an uncommon earner or you aspire to be an uncommon earner, why would you not want to use the primary savings vehicle that many wealthy people already implement?
Yeah. I mean, they may be doing all this investing in their businesses and in the real estate market, but they are tapping their own capital pool, right? That they have built so that they can do these deals, so they can do these transactions, whether it be, expanding their business, entering into a new market, whatever, or finding another piece of property that either can generate income or that they can fix up and flip or whatever they, right? I mean, it's pretty, they're going to have to go somewhere. Do you think they always, if they're interested in making money, the reason, one of the reasons they got into business for themselves is because they don't want to work for somebody else. They don't want to be beholden all the time. I mean, you're going to have some, strings attached to you by your vendors and, and your customers and how they feel. So, but the other thing is that uh, they like to make money. They think they can make more money doing it themselves, being the owner, right? So they enjoy trying to build up this money. Do you think they want to give it all away to somebody else to always finance it? I'm not, obviously, we're talking small percentage of people doing these policies, but many people, again, that was about the infinite banking practitioners and how they were affecting things. But of course, whole life has been around for over 100 years. So, and it built cash value, and it could be generational, and it has been generational, right? So, yes, uh, they've been building up millions upon millions of dollars by being savvy about the uncommon knowledge.
Yep. Because
And
again, you look on paper, the attributes of this are so advantageous for building wealth. It operates outside of the IRS tax code. So you can have money grow tax. I mean, we call it whatever we want, but you can theoretically never pay another dollar of tax on any money that you put into that policy. It is guaranteed to go up always. It's fully leverageable, and it provides a hugely exponential death benefit for the majority of your life. I mean, unless you live to be very old, your heirs are going to get a lot more money than you've ever put into the policy. So again, this is it's really a no-brainer when you look at it for face value, especially if you have aspirations to grow wealth in other areas of your life. This is something that complements it. It can be utilized at any point, and we just want to open up people's minds to think about this in a different way, that this isn't some like weird trick or gimmicky thing that people should be throwing their money into. This is something that has predated any IRA, any 401k plan, anything like that. I mean, this has been around for a very long time, very commonly utilized, and just because people haven't heard of it doesn't mean that it's something sketchy.
Well, I'll say I might have shared this before that, longtime friend, 35 plus years. He's about that same amount of time, right out of college. He started selling for, I'll just say it, New York Life. He has been a top achiever, so to speak, in the industry. He's recognized by the industry as, the amount of premiums, the amount of coverage, he's, all that kind of stuff, right? He's a hard worker, and he's heard of infinite banking, but he sells, let me back up. He sells whole life. He sells whole life insurance. Yeah, he might sell term here and there, but he sells a lot of whole life, but he does real small policies. He isn't really covering people in a big way. He's just getting them started, right? Hey, I'm a business owner. You're a business owner. Do you have any life insurance? Geez, you ought to get at least, 50,000 or 100,000, whatever it is, right? I mean, he's a sales guy and he's a great guy, but he doesn't, even though he's heard of infinite banking, he's not teaching anybody this concept, right? Because he doesn't know it. And back to, like, I don't know if you still have those numbers up about how many financial advisors there are in the country.
Yeah, I mean, I'm seeing different they all range from mid to high 200,000s to, up even up to close to 400,000 financial.
When I went to a training that led me to then find out about infinite banking, I was at a 2-day training, and one of the senior agents, he led a team, he owned the ultimate agency that we all worked under. And I said to him, he had worked for Primerica, which we've talked about, Primerica and A.L. Williams. Everybody can look that up. That, he's the one that came up with this, buy term and invest the difference, right? And I had been introduced to it back in, I'd say, mid 90s. And I thought it sounded like a great idea, right? Pay as little as you can for life insurance, get the most amount you can, and then whatever else you have, let's sell you mutual funds, right? And so, long way around, I'm talking to this gentleman, and he had worked for Primerica before he got part of this, grew this agency. And I was saying to him, I forgot all about Primerica. And he said, you forgot about him, huh? There's over 62,000. This was in 2019. This was in June of 2019. I'm having this conversation with him. And he says, there's over 60,000 Primerica agents. Just that one company. Not that they're small. I'm just, right? So I do. Thanks for listening to that. But to me, of course, you're going to be drowned out. How is it? Think about it as, infinite banking is a piece of paper, and you piled up thousands of pieces of paper on top of it, right?
Yeah.
What are the chances you're going to find that piece of paper that talks about infinite banking? If Wall Street and the marketing machine that's everywhere, it's all over the internet, right? If you're searching on financial stuff, you're going to get marketed to, right? I mean, you can't watch a professional sports game without seeing banks and financial firms, and right, it's in your face. And none of it talks about infinite banking. None of it talks about whole life insurance. I mean, I shouldn't say none. I've seen, that's not their big focus is whole life, but they might mention it. And that's so rare, right? They wouldn't even talk about the benefits. They would just be saying, we do this, right?
Yeah, they'd probably try to sell you a policy, but again, I mean, term life insurance is much more profitable for an insurance company in general.
Yeah.
Whole life gives them a very good source of cash flow, but also requires them to plan quite a bit more. So,
Yes,
yep,
totally. Right. I mean, the reason, as we've said, the term, they rarely pay out on those.
yeah,
They just collect money.
1 to 2% payout.
Yeah. Meaning,
Whereas a whole life policy, they're gonna pay out. I mean,
yeah.
yeah, they're going to pay out, so they have to be making sure that they're doing something with the money to account for that down the road.
Yep.
But
Yep.
yeah, so again, it's not advertised, and I don't know if there are rules around that. There might be regulation around advertising because I have to think that there's a reason that they don't. But
That they don't what? Advertise what?
advertise whole life.
Oh. Oh. Well, yeah. And I mean, you can go to, right, people that are listening, you can go to pick life insurance companies that you know, and if you can find that they sell whole life. I mean,
Oh yeah,
they'll mention that you can borrow against it, right? They'll show that as one of the attributes, right? You can take out a loan. But I mean, they don't even really explain. You aren't taking your money out. You're leaving your money there, and your money keeps getting paid the dividends if we pay dividends. They're not explaining it at that level, right? They're not trying to look like a place to do infinite banking for the most part, right? There's
well, I think some of that is honestly intentional on the part of the insurance companies. I think that
yeah,
they've had this product that's been around for hundreds of years, and I think that it's advantageous to not get too much attention because of the way that it operates. I think again that's somewhat intentional on their part, but it's up to people to be aware that it exists and to understand how it can be utilized. And again, that's why John and I are here trying to explain that. That it is there, ready to be utilized. The insurance companies do sell these products, but again, you're just really not going to hear about it.
well, and we'll just kind of maybe wrap this up a little bit. Obviously, keep adding on if you'd like, but you had talked about, that you're an uncommon earner. And back to the Brian Bloom book, Confessions of a CPA, and why I kind of brought this up about the 3 levels of knowledge. He wrote that book around 2011, so he's taking numbers from that time. Um, and he said, if you asked a person, do you think you're one of, the common kind of middle of the road, whatever that means, right? The majority, do you fit in that group of earners or do you fit in the uncommon group, right? I mean, most of us think we're just kind of common, and we're common amongst our community, our peers that are, that we circle with, that, we run in circles with. So we don't think we're doing really well. And you and I have talked a little bit about this, certainly in the Northeast United States. We're definitely affluent, more affluent than on average than the rest of the country or most of the country. Obviously, there's other places that are very affluent. But we're certainly in the top group, and that makes us, in the very top of the world, right? Because America incomes and so forth is at the very, very highest level. And so back in 2011, to be in the top 25% earners, a household only needed 67,000. Tried to get the top 25% for 2023, and I kind of scrambled doing it before this call, but I could only find, even though I went to the same place that he went to, and they had a report that was similar to the one, because he went to the taxfoundation.org site, and I couldn't find that. They talked about the 5 and the 10, but they never talked about the 25. And he tried to get this from the summary of the federal income tax data. He got it, actually, he got his in 2010, and I tried to get it for last year. But I did find somebody that's saying what it is for the top to be in the top 20% earners in America, and that is it was 130,000. So I would say that to be in the top 25, you could probably,
And 130,000 is familial household income.
yeah, it's total. Again, that's your gross. They're talking about gross income. They're not talking about disposable income. They're talking gross, so you don't even have that much. But so you'd say the top 25% is going to be a little bit lower. I'd speculate it's probably anywhere from 110 to 120. Seeing you're at 130 to be in the top 20. So, hey, nowadays, there's lots of families that are combined income or even in that top 20, right? Because that, I'm not trying to make anybody feel bad that isn't making that amount. But, we know people are making crazy, what seems crazy when you look back just, 10, 20, 25 years ago, we wouldn't have thought, people are making, as a young couple making 250,000 each, right? So, they're way up there in the. So what he was trying to say was, if you're an uncommon earner, why are you listening to the common, basic knowledge that's out there? Whether it being shared as by the proverbial brother-in-law that's giving you advice, the taxi driver, but those are the extreme. It's just that we're being thrown in. A lot of people are being thrown into, hey, just do what everybody else does. And so even people that are making really good money, they're just doing the common knowledge, which is not complete. It's not complete.
Nope. And they're utilizing, financial advisors, which is nothing wrong with that, especially if it helps people adhere to a plan. But there is literally no evidence to show that putting your money with a financial advisor will yield better results than you self-managing investments. So again, there's really, for the vast majority of people, they're doing something that they're paying additional money for that's eating up gains, that's not producing a better result. And again, they're throwing their money into something we've talked about this so many times. It can't be accessed for a very, very long period of time. You could theoretically get a better rate of return than you'll get with a whole life insurance policy, provided you don't tinker with it for many decades. You just let it sit there and don't mess with it. And most people are not very good at doing that. And you also might not. If you happen to retire and you want to pull that money that you haven't touched for decades and the market happened to crash quite a bit, and you need to pull that, you're going to run out of money more quickly than you thought. Or you could look at a system that is essentially a tax-deferred, a tax-advantaged, leverageable savings account that's always going to go up, where you can access your money anytime you want, no questions asked, and you have a very nice death benefit for your family and your heirs.
Yeah, I didn't necessarily want this to go too much longer because I'm cognizant of the fact that people can't sit and listen for 40 minutes, but I wanted to go back to something we talked about before the call, or I met with a couple, and he wants to retire in 18 months, and uh, he's got roughly $1 million saved that's in the market in some form. Um, he and his wife plan to buy more, but they just in I think 2022 they bought a 3-family as an investment, and right now the numbers make sense, but they paid like 530 or 550,000 for that 3-family, and yes, they say it's gone up maybe closer to 600,000 on the market, that it would be saleable around that number. But right now the numbers are working out. They raised the rents. They had to send letters. They raised the rents because rents are crazy. Somewhat seems crazy, but it's made it profitable, right? It's kicking out some cash flow. And they think that, hey, as we keep paying it down, then we'll have equity. We're going to tap into the equity to then put a down payment on another property. And but the husband told me that, cost basis is everything you put into an investment, including your policies, right? We call all your premiums or what your costs were, right? And he said that he was, with this million, he had put in, let's just say, 1,050,000, and he's down 50,000 after saving $1 million. My thought just now came to the fact that he and his wife bought this 3-family, and of course they put a chunk of money down, right, that they had saved outside of that, and that money's all gone, right, because they gave it to somebody else, and then they financed over 400,000, right? And if they had been putting this money, instead of putting it at risk and being volatile, and to the point where after 20 plus years probably of saving and not touching this money, right, because it's IRA money, right? And I say right, but it is IRA money. And he's not 59 and a half, so he doesn't want to get penalized. His wife doesn't want him to get penalized. And I'm just trying to be careful that I don't share too much information. But the fact is, if they'd putting that money in, their million could be still growing. And he could have borrowed.
If it had been over the span of a couple decades, it'd probably be more than double what he had put in.
Yeah, exactly. And the fact is,
with a multi-million-dollar death benefit.
Right, exactly. I mean, if we could just show people this, and they would have been able to leverage that cash value and borrowed from themselves
and on much better terms than whatever they got from the bank. I guarantee you that.
Yeah, and even though you want to pay it down, build equity, well, you're going to guaranteed to build the equity when you're paying it down into your policy, because you're freeing up that equity there. Never mind the property, the 3-family, right? Because we can't control that. We don't know what's going to happen to the real estate market. We don't know that the so-called equity we built by making payments and putting principal money towards the debt, that means that money is really going to be there when we want it. Because if there was a downturn in the real estate market, again, I'm not hoping for that. It's just, if it has happened, and if it does happen, and yes, they kept saying, we're this age, we're in our late 50s, right? They're thinking, hey, everything's late. We've done, late to the game, and even thinking about doing infinite banking, right? But they don't have all this room necessarily of time. Let's just say that, life expectancy is 80, right? I mean, if you start down markets in real estate and that's one of your assets that you were counting on, right? And then, I can't even live the dream that I wanted to do in the real estate business. I ended up with a place, by the ocean, and right. And there's no, right. And then you have the stock market. So not only are they exposed on the real estate market, they're exposed on the stock market side too, because their financial advisor is saying, sit tight, keep it all there. Even though I made some moves that maybe you're not too pleased with now, I'm conservative and you'll be fine. Well, yeah, if you're conservative, then why aren't you talking to people about all the benefits of whole life? Permanent.
It's funny too, because when you look at a lot of conservative plans, like a conservative financial plan, they target like the exact same yearly returns that you'd get in a whole life insurance policy with like infinitely more risk because they're vehicles that can still go down. It's just kind of funny, but yes, I totally agree with what you just said, John. So
Yeah, I remember a friend of mine listening to maybe we had only done like 3 or 4 episodes, right? And I remember the comment was, I just love your voices, and that you just sound good together, and and you just seem like really nice guys. And I have to say, the last couple episodes, I feel like I'm a little more passionate, and I'm a little bit more excited, and maybe even forceful, right? Because it's kind of like, Doug, it's kind of like, and this is not me feeling good about saying this, but I remember having a conversation with my dad, and I was certainly 20 or less than, and I said, geez, it must really be tough when you have really good advice, but nobody wants to listen to it. And in some ways, it feels like that at times, right? Is like, obviously the people that come to us and want to learn, and then do end up doing a policy, and then stick with us, long term. It's great, but because of the headwind for us in the discussion, because we're up against the marketing machine, it's tough, because you're saying, my gosh, and to have clients say, if I could have done this earlier, is it too late for me? And then you have the other
everybody
side.
wishes they could have done it earlier once they start.
Yeah, and then have the most of the world that either doesn't know about it, or if they hear anything about it, they don't even hear the infinite banking story once they hear it's life insurance. Like, they just, oh, life insurance? That's going to be the worst place to put your money, right? Like,
Oh yeah, well yeah, it's terrible. The advisors, you just scamming you for
yeah, it's a
commission.
scam or whatever. Even infinite banking would be a scam.
Yeah.
And then you get people like Dave Ramsey running around saying it's a scam. That whole life's a scam. You got to borrow your own money. Oh my
Yeah,
gosh.
Dave sells term insurance, so he would say that. But anyways, we digress.
Did we? Okay. I hope
No, I mean I don't want to go down a rabbit hole about Dave Ramsey because I could talk about that all
Oh,
day.
yeah, yeah. Yeah. I get it. So, okay. Well, I appreciate you once again, being willing to just dive into something that I had in my head that I just wanted to get out there. That, be open, be a student, a true student that says, but again, most of the time, adversity has to come along, and I do sense that, or the stress gets to be too much, and people say, "Is there a better way?" Because I'm worried. I don't know if I'm gonna have enough.
Yeah.
And this should never be that situation for most of us in this country. I'm saying, well, I say, let's talk about the top 25% or even the top 50%. You've worked so hard. This shouldn't be the way for you. And if you think it's too late and you have any children or any, family members that you love that are younger, like, you can share that with them. You can try to share your wisdom or your knowledge. Again, like with my dad, who knows who's going to listen, but sometimes they do. They listen to the wise adults and elders. And so it's not too late if you can share it. And would love to hear from some of you. Thanks.
Love it. Thanks, John.
Okay, Doug. I hope you have a great day.
You too, man. I'll talk to you soon.
Okay, sounds good. Thanks.
Bye.
Thank you for joining us for another episode of the ABCs of IBC.
If you enjoyed listening, please hit subscribe and leave us a 5-star review wherever you listen. It really helps. See you next week.
Bye.